Okay, guys, we are continuing with our issue. Yes, let us now attempt question 3. I'm sure everyone is seeing the question clearly on the board. Rumbi Company had the following incomes for the year. Trading income as usual, property income 25,000, capital gains 15,000, QCDs 18,000, and dividends from non-group companies 50,000. So we are required to compute the corporation tax liability. All right, so let us come up with our table, right? Trading, the trading income, that's 65,000. Property income, 25,000 pounds, and the capital gains 15,000, right? And then they give us a total taxable income less QCDs. I mean, they give us the taxable income, not the total taxable income. All right. Yes. So QCDs, that's 18,000. Okay. So this one gives us the TTP. That's the total taxable income. So if we punch these figures in our calculators, we should get how much? 65 plus 25 plus 15 minus 18. What's going on here? 65 plus 25 plus 15 minus 18. That's 87. Then we deduct dividend from non-group companies. This was 50. I mean, we are not separating. Actually, we are increasing. I'm sorry. We are increasing the profits to come to the augmented profits. So it comes to 137,000. So 137,000, ladies and gentlemen, is between 50,000 and 250,000. So in this case, the marginal relief applies. Is that clear? The marginal relief applies. So what do we do? First of all, we need to charge. Okay. First of all, we need to charge our TTP at 25%. So first of all, this is how you compute the tax liability. Tax liability. The tax liability, first of all, is tax on TTP at 25%. The TTP is how much? Is 87,000. So 87, as we have there, multiplied by the main rate, 25%. we get 21,750. Okay, and then we say less marginal relief. All right, the marginal relief, we have the formula. The formula says for MR, you can just say working one. MR is equal to the upper limit. The upper limit is 250,000 minus augmented profits. Our augmented profits, that's 137,000 multiplied by the standard fraction 3/200 multiplied by the TTP. TTP is 87,000. 87,000 divided by augmented profits of 137,000. So that figure should give us something nice. So if you have got an old calculator like mine, you can just do it step by step. So first of all, let us get the difference between 250,000. Sorry, what's going on? 250 minus 137, you get 113. Then you have to multiply that figure 113 by 3 divided by 200. You get 1.695. You then multiply that figure by 87,000. 87,000 divided by 137,000. Okay, so you get 1,000. Remember the first figures were in thousands, so you can just multiply that one by 1,000. That should be our marginal relief. So 1,076. 1,076. Okay, so we deduct that one from the text, which we computed using the 25% there to get the liability. All right, so that's 21,750 minus 1,076. You get 20,674. This is the tax payable or tax liability. Okay, it might not be the right answer owing to our, limited capability calculator. Okay, but on Excel it's quite simple. All right, so you just have to understand the steps. The steps are as follows. First of all, you need to use your pro forma, and your pro forma starts with the trading income 65,000. You add property income, then the capital gains. You deduct the QCDs, the qualifying charitable donations, right? And then you come to TTP. Then you add dividend from non-group companies of 50,000. You arrive at the augmented profits. Then, with that, you then move on to your tax liability. And we are saying because the figure of augmented profits is between £50,000 and £250,000. It means that we need to first of all apply the main rate tax, corporate tax rate of 25% on the TTP, and we get that amount. Then we reduce it by the marginal relief, and we computed the marginal relief here. This was our computation of the marginal relief. All right, and we obtained this amount. That's the amount of marginal relief according to our computation. All right, do not worry, it might be wrong in terms of the calculator which we used, right? But we can as well check from our Excel what we did on Excel, right? So we had, can we draw here? Okay, so trading income, we had initial, let me just try to show both these pages together. Good. I'm sorry to those who have got a shorter eyesight. Good. So we start with trading income. We have got 65,000, which was already shown there. Then profit income, 25,000. 25,000. We actually write on it. And then capital gains. Total income came to 105, right? And then we deduct the QCDs, all right? And we arrive at our TTP of 87,000. Then we add the dividend from non-group companies, 50,000. We arrive at 137 augmented profits. Then this augmented profit is between the lower and upper limit, which means a rate of 25% has to be applied on TTP, and then we also reduce the TTP by the marginal relief, all right? And the marginal relief, ladies and gentlemen, was also computed, and this is the working of determining the marginal relief. Okay, sorry, all my workings have disappeared. That's fine. Now, as you can see, you can as well put the figures in the formula. Like, for example, the upper limit is 250,000, and then the augmented profit figure is 137, and then the standard fraction, that's 3/200, and the TTP is 87. So all these figures are in the are required in the MR formula, the marginal relief formula. So that's how we did it, and we came to the marginal relief figure of 1,076, and this is the figure which we used there.